Arjun, how do you see this? Like, what are the threats that if a national stablecoin is launched, INR pegged, like, what are the threats? Like, why is the government getting scared? But the whole thing is like they also need to keep an eye on the whole new financial landscape which is being built right now, right? So, like, why do you think that there's a threat, or what are the threats?
I mean, think of 1990s India when probably, or like 1980s India, where BSNL was the only telecom, or BSNL and VSNL are the only two duopolies and completely controlled by government. And government is making some amount, and the government is able to completely have control on what is being spoken, what is being transmitted. Right? Recently, they started cutting internet in JK and all these sensitive areas. They feel they want to be in control, government, right? But at some point, you have things like internet that comes parallelly. It doesn't come through official channels. It's just that people start using it, and one day you realize this is not within your control, and you stop policing it, and you just start having certain rules and let it free. I think that is how technology becomes pervasive. So as long as it takes, they will try to keep everything in control. It's almost like your kid, right? Till, even if the kid might be 20 years old, but as a father you will think, I have to take some decisions for him. The kid is not ready, not ready, not ready, and you want to keep completely within your this thing. But I think there are certain jurisdictions which are very, what to say, bold, and they also are allowed to be bold because they're pretty small. Like take Dubai for example, or Singapore for example, or Hong Kong. Right? Hong Kong is an experiment place for experiment for China. Right? They can do a lot of things in Hong Kong without having the rest of the country take into it. So probably stable coins as a limited use case, government should start exploring, right? Probably for one use case, like already crypto is there, right? So the funny fact is, right, the things about FEMA, right? RBI said crypto is not FEMA. So probably he is better off when transfer someone is better off transferring INR stablecoin outside rather than transferring INR. When he transfers INR, when he breaches this FEMA limits and everything, people can get into trouble. But these are all legal things, right? Um, so the also the problem is government doesn't want to come up with a piecemeal solution. They have done it for problems where they have clear answers. For example, taxation, advertisement guidelines, FIU for PMLA guidelines. They know that they can take that almost exact same thing and apply, and they don't have to tweak too much. But for stable coins, for cryptocurrencies, for crypto exchanges, they have to think fresh, right? Do we have need to have a regulator? What is allowed, what's not allowed? And the biggest problem is it's not compatible with the existing system, right? I have more questions for Anuj in the sense, would the wallets have to be KYC'd, right? Typically, with respect to bank, when you hold INR in digital form, you hold it through a KYC solution, right? Banks, RBI is very comfortable with it. So with respect to stable coins, can non-Indians have stable coins, use stable coins? What is it? So the thing is, answer is not yes or no, but they have to have a process to think about this, right? Someone has to take a decision, right? How can they take a decision? It's like a huge decision, right? Whether you allow non-Indians to do this or not do this, and it can have implications for next 10-15 years. For example, if you take US dollar in 1960s, they made this new thing called euro dollars, right? Dollars issued outside US, right? So that is how London became what it is, like the financial hub of the world, right? There is this whole documentary called Spider's Web, why tax havens and everything came into picture. But it's a significant decision to allow issuance of dollar outside this thing, right? With respect to INR stablecoins, I always thought the stablecoins will come outside India and probably in a algorithmic manner. That way, Anuj may not need to hold a bank account in India. He's away from regulations. You have a synthetic product that is equivalent of INR, but of course, it comes with its own risks, but at least compliance wise, it may not be a trouble. Anuj need not even be based out of India, right? But Anuj is doing it the hard way, just like we are also doing it the hard way, right? Even for crypto exchanges for that matter, it looks very easy to run a crypto exchange for India outside India rather than having been inside India, right? And just do a P2P. You don't have to have lien marks, you don't have to go and meet regulators, you don't have to think of a ban happening and all those things, right? There are so many problems that are there. But I think being early also has an advantage if it gets regulated as an exchange, right? We are in a very good foundation. We have established a solid foundation. Same thing with Anuj. One last thing, right? So I always think why stable coins would succeed, right? Think of a shop vendor right now showing a QR code, right? he has to go open a bank account, also maintain minimum balance, all those this thing. KYC will take a week's time, and he has to go talk to someone for the manager. He has to stand in the queue and all those things. And after all that, once the account is open, again he has to make an application, get that QR code and everything. Think of Bitcoin, right, or a stable coin, right? I create a trust wallet or a MetaMask wallet or a Ledger Tracer, right? And after that, 2 minutes, I take a printout, I show the QR code, I start accepting money, right? I don't have to talk to anyone. I don't have to have permission. It's almost like how people create email ID, how people create WhatsApp accounts, how people create Facebook. It's as easy. It's so convenient, right? That is why when stable coins and CBDC and INR are going to be there, stable coins are going to have more adoption because it's frictionless experience and it is created for the modern world for millennials, people who are born and
True.
bred in internet.
Very true.
This is
Very true.
very
Very
native.
true.
This is very
Very
native
true.
experience. So eventually people will move on to this, right? That is why RBI is afraid, right? They want to have as much as volume
Control.
transaction happening within the entities that they have
Framework.
100% control,
Right.
not the
Okay.
entities or systems that are 30% in control or 40% in control, right?
Right.
Uh,
Right.
one more thing, if I want to add, I had a chance to talk to someone who is in the business of gift cards, right? One of the first ever gift cards launched in India. So at that point of time, RBI did not have many licenses. They had only a closed loop license or an open license, right? So they had this prepaid instruments, right? So they thought gift card should come under prepaid instruments. In prepaid instruments, you need to do a KYC, right? So when you are buying a gift card, right, do you have to do the KYC of the receiver or the sender? There's so many complications, right? No one would, like I'm saying, Archit, I'm going to give you a 5,000 rupees gift card. Can you give me your PAN card and Aadhaar card so that I do the KYC and give you the gift card? Can never ever happen, right? Then RBI understood, then they created some this thing, and then finally said, okay, KYC is not required as long as the money comes in via KYC instruments, right? You either put it through cards or bank accounts so that cash, basically they avoided cash, and that way gift cards escaped from being coming under the ambit of RBI regulations or having KYC for that matter, right? So government side, it's very complicated. They have to take decisions keeping, they have a huge backlog, right? They cannot be like startup, like forget everything today, I start from scratch, no more tech backlog. So they have a compliance backlog. They have been working certain way. They have LRS limits, this, that, and they're very used to it. So it's almost like 1990s when they have to dismantle the entire structure. And did they dismantle? Actually, 50% or 30% of the red tapeism is still there, right? They thought they are dismantling it, but governments, in a way, whatever they talk, every word they utter, it kind of becomes another step in compliance, right? So I think that is where we are. Eventually, it will happen, not because RBI wants it or Indian government wants it. It just happen because people want it and people find it more convenient, and convenience wins in the long term.